Hello traders, Gary Wagner here, just about 10:10 in Honolulu, 4:10 in New York. It is Friday. Happy Aloha Friday, as we say on the islands. It is September 23rd, 2016, and this is the Daily Report for Gold and Silver, our weekend review, in which we combine it with trending markets, taking a look at activity this week, as well as our forecast for next week. And boy, did we have an interesting week this week. Of course, FOMC meeting of this month concluded. Net result was a stable interest rate, not changing. The net result for the precious metals was a tremendous upside surge, and we did enter a trade this week, actually putting our position on 1 day prior to any kind of FOMC announcement, going long both gold and silver. Of course, we will cover that trade in detail, as well as our upside target, our stop placement, and how we're looking to trail that stop up, as well as some of the other key markets in the commodity complex and U.S. equity complex that affected us this week. First, let's take a look at current pricing of gold and silver. So, first of all, to gold. Gold in terms of COMEX most active December, 1341.50, off about $3.20 today. Low today, 1337 with a high of 1344. We did place a long position on this would have been September 20th on Tuesday. Traders taking that call got in at 1317. Markets closing, it looks like, at 1341. When we look at spot is trading up, nominally up about $1 at 1337. Of course, we got long this market at 1314. Our collective stops are currently 1305. That's if you are trading COMEX spot below 1300. Of course, we'll talk about raising that stop as we get into today's show. Silver closing off today, off by about 35 cents or 1.75%. Quite a dramatic drop, $19.75. We did enter a long position at 1930. In terms of COMEX itself, when we look at spot is sitting roughly 9-10 cents in terms of a differential at 1965, and we entered our long position in spot at 1921. We'll talk about collective stops as we pull up our first chart. So traders, the first chart that I do want to look at on today's show, a standard candlestick half a day candle. So you get 2 candles per day, and I want to go over our trade that we put on, our stop placement, where we're looking to raise that stop to, as well as our upside target on this trade. First off, as I said in our opening statement, we put on this trade on Tuesday, September the 20th. Traders taking that call. We entered right in here roughly at 1317. So it would have been this particular open or low on that day. We put the trade on really as we went into the closing prices of Tuesday's activity. Of course, what we saw unfold was as follows, and that was that on Tuesday night we had an announcement by the Bank of Japan that moved gold up about $10-11 in terms of the net change. And then when the announcement came out by the Federal Reserve that interest rates would remain steady, we saw the market clip up a little bit more, trading up to about 1337. That, of course, occurred on Thursday. We saw this marketplace itself hit a high, and this was at about 1347, I believe, and settled a little bit lower on the day, a little bit of backfill at about 1341. Now, we have placed our stops initially at 1305, just below that, and that's to cover these lows, and it really was to protect us as the announcement was coming out of the FOMC meeting, because we tend to get an increased amount of volatility once that announcement comes out, regardless of the overall direction the market's going to end up moving. And in fact, we saw that because we actually saw a gold trade to a low of about, I believe 1310 was the low. Now, we are obviously going to move our stops up pretty much at the beginning of the week. And what I'm looking at in terms of price structure itself and a place that makes some logical sense to me is we're going to want to put it just under this candle initially right here, which comes in roughly at about 1323, 1322 in that area. And that should protect us even if we have a little bit of backfill. The other area that I'm looking at, if we get a very, very solid open in the market and it continues to take off, is going to be this area right in here, which comes in roughly at 1339. It's just below these two candles right here. And so traders, that really defines our stop placement and where we are looking to trail our stops up throughout the week. Ultimately, I would like them, as I said, above 1331. Of course, we're in at 1317. And now, most importantly, what's our exit strategy or upside targets? Well, we have two key areas that we need to see how the market reacts if, in fact, it continues to rise throughout next week. The first level is 1357, and that is this top that came in right here pretty much at the beginning of September. Now, if it has the strength and ability to break above that point, we would want to trail our stops under this particular price point, because this would then become support, although it's currently resistance. If that occurs, the next real level or target that we would have would be about 1376. And that, of course, is based upon this double top that occurred here in August as well as July of this year. So as I said, maintain your current long position. We will look to move our stops up immediately at the beginning of next week. So traders, I also want to take a look at silver today. We did enter long positions in silver. We are looking at most active December COMEX contract, this off of our continuous contract, and it is in weekly format. And we do have different levels of upper level resistance, and those are basically our targets. Now, we are long this market roughly from 1930. Market closed at 1974. Our stops right now that we put in below this particular candle here. So we put our stops in below 1878. We will look to move our stops up, and we're going to look at an area of about 1950 in terms of where we want to move our stops up when we move our gold stops up. Now, in terms of our upper level targets that we're looking for on this trade, we want to look at two key areas of resistance. I have two basic fib retracements in here. One starts down at $13 when we hit those lows at the end of last year, beginning of this year, up to the high that we have seen this year at about 21. And those are these hash marks right here on the side. And so our next real target or area of resistance comes in from this shorter of the two fib retracements from 1583 up to these record tops. 23% retracement comes in right here at about 1993. That is the first level we want to really take a look at. Now realize today's high went well above that at 2002. So I have a feeling that we should not have any trouble really getting above that. We then get these series of tops at $20.50. So that would be really our initial target. And then, of course, to see if it wants to come in and make a new high on the year. Now, that, of course, would occur, I believe, along with gold. In other words, the two would be making new highs at the same time. So we would see gold breach 1370 plus and silver breach $21 plus. That would be the best case scenario. Again, as I said, we're going to maintain our long positions through the weekend and raise our stops first part of next week. So traders, after seeing U.S. equities having a strong rally for the last couple of days, we did see it giving back a decent percentage of the gains realized over the last few days. Standard & Poor's, we're looking at the E-mini, 2158, closing off about 0.5% or 10 points lower on the day. Now, I draw your attention to our daily chart. Let's go ahead and blow that up. And on this chart, we have two key moving averages. First moving average, of course, would be the 200-day. We're well above that, no doubt. We're well above our fib retracement points. But when we look at the 50-day moving average, and that comes in right in here, you can see that although yesterday's market activity pushed prices above the 50-day moving average, today's lower pricing moved them back below. In terms of what I'm looking for next week, it's really dependent, I believe, on a technical basis as to whether or not this market can open and start trading above that 50-day moving average, or if it remains under pressure and continues to trade lower. In other words, I think that the 50-day moving average is the key level to watch this week. So traders, we are looking at a day in which we're seeing backfill, or the market's moving pretty much in the opposite direction in which they had been moving since the FOMC announcement that interest rates were going to remain the same. Same can be said for the dollar index, nominally fractionally higher today, 0.03%, 95.47. The market has been down over the last couple of days, but I draw your attention to this daily chart, and we talked about this a little bit yesterday. Take a look at this candle that we got on Thursday, and it is by any stretch of the imagination, whether you want to call it a hammer or a doji line, the open and close, that body size is so small. What it really says is as the market hit 95 on the dollar index, we had tremendous liquidity come into the market. They began to buy up dollars, moving it back up near the open of Thursday's trading activity. I am looking for the dollar to continue under pressure next week. Traders, there's absolutely no doubt. We have seen equities as well as precious metals on a tremendous rally this week, just following announcement by the Federal Reserve that interest rates were going to remain steady and we would not see an interest rate hike at least this month. We took a decent risk when we put our trade on Tuesday, September 20th, prior to that announcement. But our sense was that there was a very, very high probability that interest rates would remain steady. On a technical basis, we talked about that double bottom in gold at 1305 that was holding quite eloquently. So with all of that in mind, we did put on positions, as I said, long at 1317, stops below 1305, market closing at 1341. Obviously, our recommendation, maintain our current long position in silver, maintain our current stop through the weekend, maintain our current long position in silver, maintain our current stop through the weekend. We will look to raise those stops. We spoke about different areas that make sense and are logical points to move those stops to. But as I said, let's see how this market opens up next week, adjust our stops, act accordingly, but we've got a good trade under our belts. This has been Gary Wagner wishing you, as always, good trading. We will talk to you on Monday for another daily update and review. Bye-bye.